This is Eric Muathe with Muathe.com. As we can see here, Kroger called down to open lower at the market open, and a discussion taking place in financial media. Let's take a look at the charts here. We're going to be taking a look at the technical aspect. We care less about the fundamentals and the reasons why Wall Street might account for a major pullback in a stock. Let's take a look and go take a look at the monthly chart here. So today being March 7th, we can see as of yesterday, this is what the monthly chart looked like. And were there any warning signs? Well, yes and no. Well, we can see for a fact that we were trading in a sideways range. So really no major tell as to what the next move could be. There was nothing stopping the stock from blasting higher. There was nothing stopping the stock from doing what it's doing right now, which is drop. Now, one thing we can see, if we go back, we can see there was a breakout attempt that failed. And maybe, just maybe, we can say this was one of the recent red flags. A failed monthly breakout here could have been of some concern. Of course, we can see the RSI was trading at 51.18, which means that any movement below 50 would be for a sizable drop low, which is exactly what is going on right now. Now, you'd be similar, or would be similar to these areas where we have big monthly drops as the RSI is dropping below 50. So really, this is just pretty much what happens when a stock is changing from a generally bullish standpoint to a bearish standpoint. There is an introduction of a large number. And as we can see, we take a look at the live trading right now. The stock is down about, let's call it 11-12% for the month. And again, dropping below 50 suggests that this is going to be a monthly move that is going to stick probably into the end of the month, as is normally the case. You tend to close towards the end of, or towards the lows of the session when you're moving below 50. Now, take a look at a long-term monthly chart. And what we see here is we can take the monthly closing highs and the monthly closing lows. We seem to be having a nice wedge here. As of right now, this wedge is breaking, suggesting momentum is leaning to lower prices on the monthly chart. Here is another argument that was already suggesting the likelihood of a pullback. We have this break of these highs here, and we can take that information of where it broke down and draw our uniformity resistance line. You can find more about this uniformity method that is derived and researched by yours truly. What we see here is what had given us a break off the highs here has turned into resistance since 2016. This has been where the stock has been rejected. So again, we had already seen this rejection. So one can argue that from a technical standpoint, things were leaning lower. Let me propose one other line, and I'll just draw it like this. What this line gives us is it gives us a breakout. You can call it there. Turned into support. Uniform action support here. And since then has turned into resistance areas on the monthly. So again, we can use the blue line as further indication that there was likelihood that the next meaningful direction with confirmed resistance, as we see here, was lower. On the daily, prior to today's drop, we can see areas of resistance in price, again, prior to today's drop. And this line has been a problem going back to the highs right here, based on the uniformity method. Eric Muathe with Muathe.com. As always, good luck, peace and blessings. I am out. Mwah. Woo.